Hello, it's the Smart Property Investment Show. Coming up in this episode, we don't need no experts. We've got some real life investors in the house who are going to share with us their stories. Hello and welcome to the Smart Property Investment Show, where we speculate, meditate and pontificate on all things property investment. My name is Andy Scott. I am an investor and the publisher of Smart Property Investment. I'm joined as always by fellow investor and managing editor of the title, Mr. Phil Tarrant. Hello Phil, how are you this week?
I'm all right, mate. How you going?
I'm all right. You always interrupt me, even though, you know, I'm always going to ask you how you are. Have you noticed that?
That's why I always am.
Never mind. Our special guest this week is Eric Brown. Eric is the Managing Director of QVS Commercial Interiors. Hello, Eric. Thanks for joining us today. How's your week been?
Very busy that time of year, but all good.
Good. Now, you're a good friend of Phil's, aren't you?
Some would say that, yes.
How long have you guys known each other?
Probably played water polo together in 1996.
Yeah, reluctantly more so. You know, I've tried to get rid of him over a number of years, but he's still a mate somehow.
I saved him from drowning once or twice, I think. That's the real story.
I'm not sure who I feel more sorry for, if I'm going to be perfectly honest. But now, I guess you're all wondering, listeners, why on earth Phil has invited his building mate onto the show. Well, Eric is also a property investor. Eric's agreed to come in and have a chat with us today and just share some of his story about how he built his wealth through property investment. So, look, appreciate you coming in, Eric. Look, probably best start at the beginning, mate. When did you first consider using property as a wealth creation vehicle, and more importantly, why?
Answer the why first, I guess. I was looking for an avenue to develop and maintain passive cash flow. But my first one, we didn't really have that in mind. I just fell into the first one, and then I've sort of learnt since there about trying to build this portfolio that's going to pay me passive income down the track.
So my question to you, Eric, and you know, we have a lot of chats around property. You actually enjoy talking about property, don't you? It's something that you get a lot of satisfaction out, and you really like sharing your sort of story and the way in which you've built it, because I think you've influenced quite a lot of people on the way in changing their perceptions around property, and now why a lot of other people do invest in property because of your experience. Is that pretty much a fair thing to say?
Oh, absolutely. I love it. I get excited about it. I get passionate about it. And, you know, when you're doing something you love and you love talking about doing things you love, it's easy to be enthusiastic and easy to explain to people why you do it and the hows of.
I think I know about your first property purchase, and you picked up something around, it's going to be hard, 2005 maybe, in the Balmain area.
Yep, correct, Roselle.
Little one better or something or other.
Yeah.
That's your first foray into property investment, right?
Yeah, I sort of fell into that a little bit by accident because my mate owned the one next door and told me this was up for sale. And I remember at the time we were arguing over $10,000. It was listed at $480. I only wanted to pay $470, and we had this ongoing battle. And retrospectively, looking back at that, is probably so silly of me to argue over that $10,000 because, you know, capital appreciation has been astronomical in that area. So I'm glad I didn't pull out of the deal on that 10 grand. I tell you, very glad.
So sticking on, I guess, this whole idea of why do you invest in property? So you bought that property for how much again?
$480.
$480. What's that property worth today?
1.35.
Okay, so why did you invest in property?
To build wealth.
It's pretty simple, isn't it?
Yeah.
You know, that's a good story. The purchase in Balmain, I think. Look, were you lucky? Yeah, I'd say so. But were also you're sort of quite insightful and in your planning and buying in a up and coming area like Balmain back 10 years ago or so was going through that period of gentrification. It was no longer a working class suburb. It was starting to become an area which was very popular with a certain demographic. I would say you got in there at the right time. Some would say, oh, you got in there too late. But, you know, after you picked up your property, prices rocketed from there, didn't they?
Yep, absolutely. And at the time, I wasn't really, to be completely honest, I was thinking $500,000 for a one-bedroom semi was kind of over the top a little bit, but I did see a gentrification of the area, and I did honestly believe that in a few years' time, more people were going to, instead of hanging in Balmain to have fun and then move on somewhere else to have a house and land package, more people were starting to realise that they loved the area so much they decided to stay on, and that's what I thought the trend was going to be.
I mean, Eric, you mentioned there that you just sort of fell into property. Did you own any property at all at the time?
Zero.
So why did you think I'm going to drop? Because Look, you've had tremendous growth there, but even so, $500,000 for a property is it's not chump change by any stretch of the imagination. Why did you go, you know what, I'm not going to buy somewhere to live in, I'm going to buy somewhere to invest? And I'm assuming you were still renting at the time as well?
Yep, still renting.
What sort of fired that decision?
I was happy renting. We were in an apartment. I never thought I'd be able to live in an apartment, but it was just really comfortable. It was easy. Swimming pool, gym. I even had kids fairly shortly after that period, and I thought that'd want to move in, the Australian dream of having your own house. But it was just comfortable, and I saw the benefit, particularly tax-wise, and the benefit of someone else paying off your mortgage.
So is it safe to say that when you first invested in property, you didn't know what your goals were? It was just a good idea to do it?
Yeah, absolutely.
And would you say a lot of people start that way in terms of property investment?
Well, I certainly did, but probably, I think the first one, it's the great Australian dream to own your own house, and I think a lot of people buy one house because that's what they've always grown up wanting to do. And I think the stepping stone to go to 2 or 3 or 10 properties after that takes a bit more effort and a bit more belief that you're doing it for the right reasons and it's going to pay off in the end. But the first one, I would say a lot of people just fall into.
I'm not going to call you a sophisticated investor, but you're very advanced. You are a sophisticated investor in that you have a very large portfolio now and it's quite diverse. A lot of people who end up buying a lot of properties start doing other things, or they become a buyer's agent because they're so good at it. Not that it matters the size of your portfolio, as in how many properties in it, but you've got quite a large portfolio now, don't you? It's more than 10, isn't it?
Yeah, it's 11. So I've diversified. I've got a commercial property, and I've got some higher end residential and some lower end residential. And for different reasons, I purchased each of them, but I'm glad I do have a bit of a diverse property portfolio, yeah.
So from your first property that you bought on the Balmain Peninsula back in 2005 through to where you are today, where you've got property in both in a number of different states, and you also have residential and commercial property. What was the sort of evolution in your thinking to go from, hey, buying a property is a good idea and I'm not really too sure what I'm going to do about it, to where you're right now in terms of more sophisticated strategy? Has it just been an organic process for you to go from, as your education, your ability and your financial capabilities evolved, it's changed the way you think about property and the type of properties that you buy?
I took a few notes of a few friends along the way that were actually getting involved, and the funny thing was that I had the technical construction training, but I had mates that didn't particularly have that sort of training and were acquiring property, so it was sort of a step in my mind one day about, shit, they're doing it, why can't I do it, And yeah, it was. I got myself a really good property accountant, and I do use a buyer's agent to purchase them because I'm fairly busy doing what I'm doing in the commercial industry. So it didn't limit me though, because I use people who are good at what they do to help me get to where I wanted to get to.
Staying with the first property that you bought, so you put an investor in there from the get-go, didn't you? How long were they in the property for? And then you did a renovation, is that right?
Yeah, they weren't in there that long. We had some good parties in there, but he was a mate of mine. Yep, so it was good fun. And then I did some renovation work to it. I spent $300,000 on it actually, but then I rented it out for near to $1,000 a week, so it was more than paid for the mortgage and the cost of the renovation, the finance cost of the renovation. So it worked well for me.
And because you said you fell into this property, are you just lucking your way all the way through this, or did you? I guess what I'm wondering is, it's a chicken and egg sort of thing. Did you suddenly think, geez, I've suddenly committed quite a lot of cash to this, I better get myself skilled up and get some knowledge so I don't make any stupid, decisions and make mistakes? Or was it just fortune that it went so well where you were that you suddenly, a light switch went on and went, I've been really lucky, but if I put a bit of my knowledge to this, I can absolutely go gangbusters with this?
Probably a bit of both. I think it was kind of lucky I bought that first one, but I always had a dream of creating a property portfolio. I didn't actually believe that it could be created so quickly, because for me it feels like quite a quick expansion, and I probably didn't believe that it could all happen that quickly at the start. But I always had the dream of creating a passive income through property.
And you still have that same dream?
Absolutely.
So it's just a retirement play for you, this?
Yep, so that's a 10-year play. 10 years I want to own 10 properties unencumbered, and whether I have to own 20 and then sell half of them down to get there, or by developing, I do have a skill set in that area, so I value add to my properties as much as I can wherever I can.
So the goal you're talking about, so from, I guess, a period semi-recently, you said you want to own 10 properties in 10 years, completely unencumbered,
Yep.
which will deliver you a particular return, I imagine,
Yep.
which is what you see is what you need to live. How did you come up with that plan? Was that something that you established with sort of your wife, or was that something that what was the process for you to work out what your goal is now?
It was actually a meeting with my accountant, who's a property accountant, and we sat down together, and we do this every year since then, is work out what our game plan is for the year, how many we want to acquire this year, what we want to do, if we want to sell any of them, if we want to realise any capital gains, and really just relating to my whole tax strategy and my investment strategy. So we review that yearly.
This first property in the Balmain area, you still have it, right?
Still got it, yep.
It's still performing?
Yeah, I'm very much a buy and hold type guy. I don't really like to sell if I can hold on to them. If they're paying for themselves, I don't see the point really.
So would you say that first property of yours is a jewel in the sort of portfolio crown, or have you got some other sort of blue chip investments like that? Because I think you mentioned that you've also got some lower end type of property as well, so you've got a bit of a mixed bag.
There's a lot of security in the lower end because, as the market fluctuates, I think at the top end of the market, there's a potential that, property prices could stabilise and the capital growth won't be there over a period of time. But I don't have that unsureness in the lower end of the market because people are always going to need to live somewhere, and they're not particular places that I'm or my family may choose to live, but they're definitely places where people need to live. They're close to public transport, they're in employment hubs, and they've got good facilities and good potential for growth. So the latest properties have been in southeast Queensland because I see that as the next growth suburbs.
Has there been sort of any points when you've been growing your portfolio over these last 10 years where you've been hesitant, or you've lost motivation, or you've slowed down, or you've been you need reassurance? Have you always been very bullish and optimistic about growing your portfolio? Has it been sort of peaks and troughs when hasn't been sort of front of your agenda or top of your agenda?
Definitely been peaks and troughs. I think surrounding myself with people that are confident and on the same journey as me makes it a lot easier because you learn from their mistakes and you learn from their successes. And having a buyer's agent that I trust and a tax advisor that I trust really gives me confidence that I am doing the right thing. Before I had that structure in place and I was doing it on my own, it was definitely peaks and troughs in that because I made a couple of bad decisions along the way. Mining town in Queensland, in Bowen, hasn't done particularly well for me, and now I can't get rid of it, and it's costing me, say, $12,000 a year. But I'm lucky enough that the rest of my portfolio is covering that cost. But I'd be doing a lot better if I didn't have that in my portfolio. But it was a mistake, and I learned a lot from it.
I think it's important. Everyone's got a couple of properties in a portfolio that don't perform as well as the other ones. Let's just stay on these sort of lesser performing properties in your portfolio or your mistakes. When did you work out they actually weren't right? So there were mistakes and they were holding you back. Talk me through the process of that identification and then the rationalisation of that, and then what have you done about it?
So I guess the two biggest mistakes I've made was one, an investment in Shoal Bay. And
sorry, where's Shoal Bay?
Jervis Bay. So Shoal Bay is near Nelson Bay. It's on the New South Wales sort of mid-north coast of New South Wales.
Okay.
And it's a great holiday destination. My wife and I went up there for holidays. We had such a great time. We thought, oh, wow, what a good spot to invest. So we did. And we bought a block that we were going to battle axe and subdivide and put two properties on. I guess I was sort of a young investor at that stage, and I thought that I could guarantee at least a little bit of capital appreciation over the next 5 years while I sorted myself out. When it came time, every year we'd do the figures again and we'd try and work out what we'd get if after we'd done the renos, what we could sell them for, and the sale price never really went up as I expected. So in the end, it was just never feasible. We'd make 10 or 20 grand on that, and there's a lot of risk to make 10 or 20 grand. So the way we decided to get around that property was to sell it, and we sold it for the same price we bought it for. So in reality, it was a loss, but another great lesson I learnt there about not relying on capital appreciation to bankroll a development.
You got a property up in Bowen, which is up in Queensland. What was the rationale for buying that property? Like, it was a bit earlier in your investment career, so you probably didn't have the depth of knowledge that you have right now. But looking back at that, what were the indicators or drivers that made you go, hang on a second, here's a really good idea, I should invest in this? And then when did you actually go, hang on a second, this is not that good?
Yeah, so I guess I got a lot of information on the suburb, and it did tick a lot of boxes for me, but these were boxes that things changed along the way. It was a mining town, and most of its industry was mining. The Queensland government was planning on putting a link between the Central Queensland rail line and Port Abbott, which they had a 15-year expansion program underway. Recently, the dredging of Port Abbott got overturned in the High Court. The Greens challenged the Queensland government decisions to go ahead on that. So that whole project got put on hold, and the property, you couldn't get rid of it. I guess I came to the realisation that wasn't such a good investment was when I sat down with my accountant on my yearly thing, and we went through the numbers, and actually through an Excel table physically worked out how much that was costing me, about 12 grand a year. That money's just going down the drain. So I decided to try and sell that. There's no investors in the market. There's no homeowners in the market. There was basically no buyers in the market. So the real estate agents all up in Bowen just said to me, not possible to sell. I could give it away to somebody if you wanted, but you'd be looking at a couple of $100,000 loss. So I'm just sitting on that one at the moment because I can't do anything about it. I'm going to start investigating whether I can put a granny flat on the back and get a second income for it, or whether I can spend a little bit of money on the property and upgrade it and get a better rent.
So this goes back to an early point that you said around having a diversified portfolio. So it's quite a substantial loss that you're covering in that property each year, but because you've made some sensible investments in other areas which have been delivering you really good capital growth, but also good yields on your on the rents themselves. So you're able to cover a lot of the cash flow constraints because of the property you have in Bowen, because of some smart investments elsewhere. So it sort of neutralises your portfolio. Is that the way you sort of view it?
Yeah, my portfolio is cash flow neutral at the moment. I don't tip anything in. In fact, I get a slight positive every month, but it's and for that reason, I can afford to sit and wait on it. The Queensland government has overturned that decision again now, but it's so subjective. It's so up in the air at the moment. No one can exactly tell me what's going to happen. I know the Greens will challenge that decision again. So it's pretty much out of my control, but I'm prepared to wait. I can fit 12 units on that site, so if ever the Port Abbott expansion was to go ahead, it's potentially a fantastic upside for me, but unless that decision's made in my favour, or then it's never going to happen.
I guess there's something we speak about a lot, Andy, and that is people who look at more speculative investments, like in mining towns, and there's a lot of blood in the streets in some areas of Australia right now with sort of limitation to growth in mining, or the maturing of a lot of the areas where mining investment exists, and I think it was just the other week we're chatting about areas in Port Hedland which were receiving a couple of grand in rents a week, and now you can't give the house away. So speculation for a lot of people is quite dangerous. Something we always try and champion or look to give greater insights on is that there's nothing wrong with investing in areas with mining, but it's always good to have a lot of diversity in the type of other work or other industries that are involved in particular areas. And we write a lot about it in the magazine. If you could reverse any decision that you've made, Eric, in your property portfolio, or if you go back and say to the Eric Brown 5-10 years ago, don't do that, what would you say? What's the one thing that where you go, don't do that, mate?
It would definitely be Bowen. If I hadn't purchased Bowen, I'd be $12,000 positive cash flow already a year. So that was the biggest lesson I learned. And it is a potential for a massive upside, but I think the risk is far too great.
So you've got property that exists in a couple of different, you've got some in personal name, you've got some in trust structures. I think you got some in an SMSF as well. Yep. Is that right?
I've got 3 in an SMSF, a self-managed super fund. I've got some in my wife's name, some in my name. I've got a new vehicle that I'm going to purchase in next, an investment company, structured a little bit differently. My accountant helped me set that up. So the different entities do help me spread the load across a few different entities, which helps, I think. Helps borrowing.
It does. So there's certain restrictions investing in a self-managed super fund when it comes to adding value to the property that sits within it. You're a commercial builder. You got QVS, which has been going for quite some time, I understand, and you do a lot of commercial work, so you actually understand building works and renovation works. But I think with what I'm quite interested to talk about is that you've got a very good portfolio that's growing nicely, and it's sophisticated in terms of the type of vehicles that you're investing in and the type of properties that you have and the different value of properties you have. How do you actually manage to run a portfolio? I know as an investor myself, it's the last thing that I concentrate on is my own portfolio. I'm always concentrating on work. How do you manage running a successful business and also building a really good investment portfolio? What's the secret? How do you go about that? What's your admin process?
Basically, it's employing or engaging people that I trust to help me look after that portfolio. So I try not to get my hands too dirty on the day-to-day running of it, and like I said, I have biannual meetings with my accountant to help me make sure the structure is still right and our goals are still there and how we're going to move forward in the next year. I guess just the property managers on the ground look after my day-to-day running of things, and it's knowing what position I'm at, so that helps a lot, having a spreadsheet to tell you exactly where you're at, what properties are costing you money, what properties are making you money, and you learn from that. And as the properties get older and I spend a bit of money on them to upgrade them, I increase the rents, and it gets easier for them to become positively geared. Well, most of them are positively geared to start with, but the level of cash I gain out of that property grows as the property gets older and as the rents go up and as I do some improvements and then increase my rents.
So as a builder, it makes sense for you to actually do a lot of this work yourself, but I think there's circumstances when you're doing renovations or you're trying to add value to a property where you don't actually get your hands dirty, you actually outsource the work to other people to get the job done. Can you talk me through why you do that?
It's just how valuable my time is and how much where I can make my money. I make my money through commercial fit outs and make goods. Like the one in Queensland that we just undertook a renovation on, I used a local builder because when I got some prices up there, it was cost me $11,000 to do kitchen, bathroom, carpet, repaint across a 2-bedroom unit. And like, to be completely honest, I couldn't send my own guys up there to do it for that price. It's just impossible. But the local guys, on volume seem to do a lot better. So why would I waste my time or my money sending my own crew up there when I can rely on a trusted local builder to do the job for me? It was so much easier. It was just set and forget, and away you went.
It's good that you've actually made the transition from being someone who's emotionally invested in property investment. You think you've got to go do the work yourselves and choose the colours and choose the paint and put the kitchen into someone who's a lot more detached from it, who's looking for the numbers, which is a big plus side. What I'm interested in, mate, is what's next for you. I know you want to keep the foot on the pedal. I know you've got your ambition, your goals to have 10 properties unencumbered in 10 years, which is a big ask, but I'm pretty confident you can get that done. What's the next property going to be? What's it going to look like? Where's it going to be? How are you going to finance it? Can you run us through the next cab off the rank, or what you're hoping to do?
Yep, so the next cab off the rank will probably be in my wife's name. We've got access to a little bit of equity in our place of principal residence in Lilyfield at the moment, so we're going to draw down on that to purchase a fourth property in her name. It'll probably be in southeast Queensland again. Hopefully we can make that purchase before we deem that the boat sailed up there. For myself, I would like to, my next one, I'd like to do some sort of joint venture with a few mates that are interested in property investment, and perhaps buy a block of 4 or a block of 8, do it up ourselves, or engage someone to do them up and then split them up and strata title them, and keep as many as we can and sell the rest.
And do you think you'll ever sort of break ground yourself and get the excavators out and get the builders in and do any developments on whether it's your Bowen block, or will you be looking for other development type of opportunities so you can build?
Yeah, absolutely. With either Bowen or at the moment with our Lilyfield place, we've been in a big fight with council for the last 2 years to get a double garage and a studio on top, and the plan is to rent that studio out, my company to rent that studio out from my wife because it's in her name, and supplement the income coming in and going against the mortgage. So that's been a big fight. I've learnt my lessons with Leichhardt Council, and luckily they implemented an external planning panel in February last year, which has helped me get that through. It's been it's been an absolute nightmare apart from that. But definitely that's the one I'm going to do. And the reason I'll do that is because we can then release more equity and use that to fund more purchases.
So when it comes to development, I know a lot of people, they get a couple of properties under their belt and they think they're pretty good at it, and they get some confidence and they get a lot of wins, and they think the next step for them is to, buy a build block where they might put 3, 4, 5 townhouses on it, or a small block of apartments. What do you think as an investor that you need to upskill yourself on to be able to go into something like that confidently? Obviously, you've got this building background, which is really good, and you've got a lot of qualifications in that regards, but have you got the confidence level now to start building yourself, or what would you like to know more about, or how would you like to improve your own capabilities to be able to confidently go out there and say, I'm going to build 3 or 4 townhouses on a block?
Yeah, I've got the confidence to do that personally because of the industry I'm in, but if I was to ever speak to anyone about that, I'd be really advising them against it. It takes a lot of time, it takes a lot of effort. So much can go wrong at developing. I think most people look at developing something and think it's an easy way to make money, but it's really not. It's so much can go wrong, and you're putting so much of your money that you've worked up for so long at risk in doing a development. So I would encourage anyone to look long and hard at any potential development before they jumped into that.
And while we're sort of on top tips from Eric Brown, I guess to wrap up things, Andy, I don't know if you've got anything else that you'd like to chat about, mate, but what I'm really interested in is just 3 really simple tips from you, Eric, that your average property investor, whether they're starting out or they've got a couple of properties under their belt, what are the 3 things that are a must that you'd like to impart on people looking to create wealth or create greater wealth through property?
I would say the greatest tip I could give anyone, the thing that changed my life, was actually engaging a buyer's agent who did it for a living, went out and sourced property, negotiated property, and I sort of struggled at the start to get my head around spending, multiple thousands of dollars on engaging someone like that, but I've learned over the last 10 years that they well and truly make up the money you spend at the time of purchase by negotiating, and it does add so much value to your portfolio. So buyer's agent, I would definitely recommend go and speak to a couple of them, work out one that suits you and engage them. Particularly if you're buying out of an area, like we're buying in southeast Queensland at the moment. I've got no experience personally in walking around southeast Queensland and telling you what suburbs are best. I rely completely on my buyer's agent because that's what he does for a living. He goes up there personally, looks around and can advise me with confidence in where he thinks I should buy next. Next one is probably seeking out and engaging a really good accountant. The strategy meetings we have with my accountant, twice a year are brilliant. It adds so much value, and the value it adds is that you know where your portfolio is at any point in time. It's not a wait and see and a guess how you're going. You've got the figures, they're down in front of you, they're in a spreadsheet, and you know where you're at with each of those properties. So I'd like to keep it at 2. They're my 2 best tips. That's
good, mate. I really appreciate the insight, Eric. I know you're a passionate investor, and it means a lot to you in terms of creating wealth and how that's going to sort of provide for the family moving forward. I feel as though it's been the Phil and Eric show today, Andy, and you haven't been very vocal, which is not the norm.
No, sometimes it's best to take a back seat, Phil. I've had feedback that I've been carrying you for too long, so I thought I'd let you off the rein today, mate, see if you could see how you went, and I thought you did a pretty good job, mate.
Thank you.
You did a pretty good job.
Thank you very much, mate.
Eric, mate, really appreciate you coming in and opening up and having that conversation. Well, with Phil, really, not myself. I was more a listener and doing lots of nodding, which no one can see. But, mate, really appreciate you coming in and telling us what you've learned and sharing some of your insight and wisdom about that. That's all we've got for this week. Obviously, as Eric didn't mention, but I'm sure he goes every day to www.smartpropertyinvestment.com.au to get all his latest knowledge and tips on how to increase his portfolio. We'll be back next week with another show. As always, anything you want to talk to us about or me specifically, drop me an email on publisher@smartpropertyinvestment.com.au. Other than that, it just remains for me to say, Eric, thank you and say goodbye.
Thanks, Andy. Thanks for having me. Thanks, Phil.
Thanks, mate.
Phil, thanks. Say goodbye.
See you later. Thanks, Andy.
And this is me saying goodbye. See you next week, guys.